Investing feels useless at the beginning. You put money in. You wait. Nothing happens. No excitement. No visible progress. No reward. And that is exactly why most people quit. Not because investing does not work, but because the early phase is designed to feel pointless. This is the part nobody explains. When you first start investing, your money is too small for compounding to matter. The gains exist, but they are invisible. If you invest $100 and make 10%, you earn $10. That does not change your life. It barely changes your mood. So your brain concludes something dangerous. This is not worth it. That conclusion is wrong, but it feels logical. Humans are wired to respond to immediate feedback. We like effort followed by reward. Investing breaks that pattern. In the beginning, investing rewards patience, not action. And patience does not feel productive. This is where most people fail. They expect investing to feel powerful early. But power comes later. The early phase of investing is not about money. It is about positioning. You are not growing wealth yet. You are building the base that allows wealth to grow later. Think of it like this. Compounding does not move in a straight line. It moves slowly, then suddenly. In the early years, progress is flat. Then it curves. Most people quit before the curve. They stop right before the phase where results finally become obvious. That is not a coincidence. The hardest part of investing is not choosing stocks. It is staying consistent when nothing seems to be happening. This is why investing feels useless at first. Because the effort is real, but the reward is delayed. And delayed rewards are psychologically uncomfortable. Another reason investing feels pointless early is comparison. You compare your results to people who have been investing for decades. You see their growth. You see their returns. And your numbers look insignificant. What you are seeing is not talent. It is time. Time is the multiplier nobody respects early. 10 years of investing looks boring. 20 years looks impressive. 30 years looks unfair. But the strategy never changed. Only time did. Most people underestimate how long compounding takes to become visible. They overestimate short-term results. They underestimate long-term impact. That mistake costs them decades. There is also a psychological trap here. When investing feels useless, people start chasing excitement. They jump strategies. They trade. They look for shortcuts. They confuse movement with progress. But investing is not about constant action. It is about correct positioning and long-time horizons. Doing less is often the correct move. This feels wrong because modern life rewards speed. Investing rewards stillness. That mismatch causes doubt. The people who succeed at investing are not smarter. They are calmer. They understand that early boredom is the price of later freedom. They treat investing like infrastructure, not entertainment. You do not expect a bridge to excite you every day. You expect it to work. Investing is the same. It is not supposed to feel exciting. It is supposed to quietly compound. Once the curve begins, perception changes. Returns start to matter. Growth becomes noticeable. Momentum builds. And suddenly, investing no longer feels useless. It feels obvious. At that point, people say things like, "I wish I started earlier." What they really mean is, "I wish I had tolerated the boring phase longer." The truth is simple. Investing only feels useless before it works. Once it works, it feels inevitable. The people who win are the ones who stayed when it felt pointless. Not because they had better information, but because they understood the delay. If you are early in your investing journey and it feels slow, that is not a warning sign. That is the process. The lack of excitement is not failure. It is the entry fee. And most people refuse to pay it.